All right. Hey, good morning, and thanks for dialing in. Sorry, I'm a minute late here dialing in this morning. Um, let's just jump right into it, and we'll get a lot of ground covered. All right. First thing I want to start with this morning are soybeans. If you've watched the overnight trade, they're breaking out here this morning. They seem to be challenging the top side of our trend line. And trend lines are fun when they work. Sometimes they're worth our time. And so today I think we should go ahead and look at them, because if you snap this trend line from this peak to the intermediate peak in July, you can see real clearly what's happening today, right? We are we're breaking out the top of that trend line, and putting some pressure on this high right here at 1275. I think if that high breaks, and I'm going to mark this as a price line right there too. If this breaks and we can close up above it, you can see what we've done on the chart. It just should jump right out at you. We've reclaimed the prior swing high, we've broken a major trend line, and we've reclaimed all these lows right back in here that held all the way through September. And so that's a big deal, and the market's doing that really honestly in the face of not a whole lot of bullish news. You know, we've talked for weeks and weeks about how there is no bullish case in soybeans. You know, the export sales are way below our supply is big, and the overwhelming sentiment has been really negative towards soybeans, but the price action really hasn't been that bad. I mean, if you're going to take the carryout of a crop from 120 to 350 million bushels in the course of a few months, you should not be holding $12, right? We should be much lower if that were true. And so I think what price action's telling us is that that's just unequivocally not true. The market's not buying what is being printed in those numbers. Now, I'm not saying the USDA is wrong, and I'm not saying that they're out to lunch. What I'm saying is that they don't know either. So let's look at what the market's starting to recognize today, which is the fact that the soybean crush margin is over $3 a bushel. Basis is really high all the way across the country. You've got a big story building in the oils. You've got a huge inflationary story continuing to brew, and we're rallying these grains in the face of a dollar that's just exploding up higher. And so the market's not buying whatever it is that the bearish case is starting to sell. And so I think if we close above this trend line, right, we will eventually come down and test the top side of it, I think, unless some catalyst happens and we just start really moving higher. If China, if China has done this in the past, where a significant trend line has moved, and they start to buy the strength because they don't want it to get away from them. So we could see large purchases start to emerge as beans start to move higher. And I think if we were able to get up into that 1320 range, I think that they would really accelerate, because there's no new supply shocks that are coming. You know, South America's planted. We know the weather's really good. We know our crop was great. We know all these things, and the market's starting to rally on top of it, which is a lot of times the beginning side of something more powerful. So if we think about soybeans for a minute, I don't know why somebody would want to be short soybeans at this present time. And if you're going to reown them, reowning them out the backside of this trend line breakout is probably a really good idea, depending on what your time frame is and what position you wanted to get into. Options are really hard to make money with in soybeans, but if you can afford it and you've got the time to make it work, I think we could be getting ready to see something pretty spectacular in beans. If we look at our weekly chart, let me pull this to a weekly here. This two down here is indicating a wave two, right? What we know is that markets tend to move in waves, and they move in 5 waves up and 5 waves in 3 waves as correction. So if you have an impulsive move up, which this big move all last year would be qualified as that, it's labeled as a 1, and then this is a 2. One thing about market sentiment is that a lot of times the sentiment at wave 2 will actually be worse than the sentiment was at the prior low before. And that's because the market psychology just hasn't quite yet adapted to the fact that something major has shifted. And I think we've seen that as we've gone back to a 300 plus million bushel carryout. You know, we've seen it and heard the bears really start to talk about it pretty significantly. And so I don't think we quite got to the extreme bearishness that we had, but we got really bearish across the industry right in here. And I don't get it, because our domestic numbers are just off the charts, amazing and good. So I think beans are going to work higher. I think we're going to come put pressure on 1320. And if we can crawl above it and hold it, then I think we're going to new highs on beans. I don't know what's going to really manifest there to drive it and cause those fundamentals to shift, but that's what these technicals are pointing to. Okay, now let's talk about corn. Like beans, let's put our trend line on here on corn. Corn has a little bit tougher road to hoe. This is March right here, so we're not quite to the upper end of the trend line on March, but we are on. But we have been on December. So December's got a little bit tighter slant, and we're a little bit closer to the upper end of the trend line than we were in March. But if you look at the setup, it's the same, right? We're putting pressure on the upper side of this boundary, and the market is starting to flirt with a significant higher high here. So you've got move 1, you've got a correction, which is a higher low here. Now we've broken out to a higher high. That's the beginning of an uptrend. We now have a new high with a new higher low. All we got to do is break this up, and you've got a 5-wave move up from the bottom on corn, which should accelerate itself even higher. And if we put a channel across this is a interesting concept on trading that we've learned recently from working with the Elliott Wave International folks and what they've introduced us to is this channeling technique. So one of the ways that you can determine or distinguish between counter trend and primary trend behavior is its relationship to channels. So if we snap a channel across this downtrend, I just got to redraw this line right here and put it right to the extreme of A, you can see that the entire move to the downward, this entire move down was contained within the parallel lines, meaning the first swing low and the first swing high, when you snap those two together, we never exceeded the downside of it, which is an indication of counter trend rally or a wave 2 or 4 position, okay? And so